Hello, everyone. Chris Martinson here, and I am here to talk with you today about what is going on with the federal government. I'm going to give you 4 things that I'm tracking to say that, well, kind of on a financial fiscal train wreck. And of course, you've been hearing about the debt ceiling, this and that, but that's not the big problem. We are on a completely unsustainable course, and this will break, and it's going to cause a lot of damage for a lot of people. So let's go there and take a look. What are these 4 things that are driving the U.S. to financial ruin? And let's just go there now and see what we can talk about. All right, first, this thing here, exploding interest expense. This is just the interest that the federal government pays on all the debt that's outstanding. It's exploding. Obviously, you see that most recent number there, $928 billion as a run rate for the year. They didn't just pay that in the last month or so, but I mean, that's how much they're going to pay as a run rate in 2023 going forward as of the last reading, and that number is only going up. We will soon be paying more than $1 trillion a year just in interest payments to the holders of that debt. Those holders, some of them domestic, some of them foreign, but this is money that basically comes into the U.S. government and goes out to the holders of the government debt. So, factor number 1, exploding interest payments. Now, those are only going to get worse as we go forward. How do I know that? Because, as Mark Moss writes here, 30% of the debt that we have is going to be refied. So this is refi. This is a refi madness going on here. Interest expenses are going to be going up a lot higher. 100% guaranteed. We know this to be true. Why? Well, if you have both more debt and you have to pay a higher rate of interest on that debt, then your interest costs are going to go up that next year. It's like as if you had one house paying 5%, or let's make this, one house, you have a 3% mortgage on, and then you get a second house at a 5% mortgage. Guess what? Your interest costs are going up. All right, how do I know for sure interest costs are going up? Because of the more debt. Also, this is just a table here of, just yields. Look at this. A year ago, if the government's borrowing on the short end with the 3-month bonds here, they're going to be paying 422 basis points, 4.22% more on this next refi versus last year. If they go out the curve a little bit, they're paying 367 more basis points on 6-month debt, or 3.67%, 2.87 if they want to pay for a year, if they want to borrow money for a year. The cheapest we got on here is about a half a percent of interest increase. It's all going to be more expensive. So that's factor 1. Factor 2, out of control spending. This is federal government current expenditures. Look at this. These are trillions. These are thousands of billions up the left axis here. Let me get my drawing tool out. These are thousands of billions, aka trillions. So this right here, this level at 6,000 billion, that's $6 trillion of spend. Let's look at a couple things here. First, for a long time, the government was increasing its spending as per this gray dotted line here at a very constant rate. It went a little above trend here for a bit as a consequence of the great financial crisis, but you'll notice it did get back down to trend at about 2014. They were carried on for a little while, but something changed a little bit in 2018. It started to deflect upwards. More spending was happening. And then, of course, COVID happened, hitting almost $9 trillion here in 2020, and a big gyration down, and then a big gyration up, another down, and here we are going up again. But what we haven't done is return to baseline. Baseline would be way down here. So we're trillions of dollars away from that at this point in time. It's just a massive, huge, out of control spending machine. So when you combine out of control spending with higher debt costs or higher interest rates, you're going to have this chart start to get really out of control. So that's where we happen to be in this particular story at this time. So those are 2 factors. We have a third factor we have to get in here, which is brought to our attention here by the Happy Hawaiian, who you should follow on Twitter down here, writing the Social Security Trust Fund used to be a source of cash for the federal government. Now it's become a net drain at a time where Treasury issuance, that's debt issuance, is going to be absolutely soaring due to these massive structural long-term deficits. This is just the situation. It's just the reality of it right now. So notice here that Well, trust fund assets, when they are in the green, that means that the trust fund, the so-called trust fund, which isn't a trust fund, it's actually a drawer full of IOUs from the government to the government. And we could talk about whether that's a legal thing to do or not as a business. It's not. That's how Enron got in trouble. They had one division try and owe money and count it as an asset to another division. Doesn't work that way. Unless you're in the federal government. The U.S. Treasury Department has special obligation bonds that is tucked over in the Social Security Trust Fund. Doesn't really work that way. But at any rate, even that is not working out, because when Treasury was stuffing those Treasury bonds into Social Security, it was doing that because Social Security was taking in more cash than it needed. So the cash would go over to the federal government and they would get these special Treasury bonds back. That's how it worked. Okay, that gravy train is over, and now Social Security for forever, until they change the rules and charge more for people who are working off of your paycheck, or pay less to retirees, or both. One of those things has to happen. It is now in the red. So this is now a drain on government cash financing. That means, you're right, higher deficits. So that's a big factor. And by the way, this is something that I've talked about a while ago. Social Security, even that trust fund we just talked about, which isn't really a trust fund, but literally a binder full of IOUs from one portion of the government to the other, that goes completely broke by 2033. And that's a big deal. And where does that information come to us from? The Congressional Budget Office itself, from this report right here. So if we look at all of that, we have one final thing. What is item number 4? Well, it used to be that the Federal Reserve would have remittances that it would pay out to the U.S. Treasury. What's a remittance? The Federal Reserve has all of these bonds, mortgage-backed securities, treasuries on its balance sheet. It collects the interest off of those, skims off what it needs for its operational needs. You know, it has costs and expenses, and it pays a special 6% dividend out to its member banks who own the capital stock of the Federal Reserve. And whatever's left over would be remitted back to the U.S. Treasury. You can see here for years and years and years, decades, that was always a positive thing, staying above this zero mark right here. I think you'll notice a little change in trend right here. That is $60 billion that's not going back to the U.S. Treasury. That will be actually stored on the Federal Reserve balance sheet as a deferred asset, meaning that over time, as it becomes profitable again, it's going to work off all of those losses, because that's what that red line means. The Federal Reserve is now incurring losses. If it were an actual regular bank, it would be bankrupt. If it was a company, it would be bankrupt. But of course, it runs the magic printing press, so it's an impossibility for the Federal Reserve to go bankrupt. But it still has to balance its books like everybody else. And so as it finally turns back to profitability, if that happens, then we will see zero remittances back to the U.S. Treasury until that's worked off. So those are the 4 factors that are determining why the U.S. government is in deep trouble here from a fiscal standpoint. These are the 4 factors driving U.S. off a fiscal cliff. I'm a little cut off in this upper right one, but I think you can see that. Number 1, Federal Reserve's losing money. Number 2, interest payments exploding higher. Number 3, Social Security now a net drain on finances. Number 4, of course, federal government's spending is out of control. And so that's where we're at. Now, what do you do with information like that? It's really, really important that you understand that there's enormous changes coming. I get these anecdotes. I live by the anecdotes, by the way, all the time now, from people saying, hey, you know, my brother, my sister, my uncle just approached me. They haven't been open to these conversations. They have a sense something's wrong. They don't quite know what's wrong. They would like very much to figure out what to do about it. They're starting to ask questions. People are starting to get nervous. It's coming from all different quarters. I'm collecting a lot of these particular anecdotes. So here's what you do about this. First, you need and deserve information and a community that you can trust. Full stop. So we have that community at Peak Prosperity. I'm going to invite you over with a very special offer. And I would love to have you there, because my whole job is to be the information scout. I go out, I find things, I hopefully explain them in a way that makes it easy to go in, so that, why? You can take action and make positive decisions to secure your future. It's what I do. You'd be crazy not to take advantage of this. And here people are saying just recently, A1 Top Gun said, I really like Chris's daily take. This is a new feature I'm going to tell you about at Peak Prosperity. A lot of bang for the buck, very important, time-sensitive info served up in a concise format. The Count MC seconded that and really likes these daily takes better, more timely, more actionable. Kathy P, same thing. She's with them on this. So what are we talking about here? Well, the daily take is once a day, I sit down in the morning, I show you what's on my mind, what's coming across my transom. We're talking about everything here on April 13th. We're talking about the South Africa collapse in energy. We talked about deficits. We talked here about RFK Jr., this thing right here. Might be talking about whatever's up and current. I'm going to give you that information. And these things are very information packed. So I'll just show you a scroll of one of these. So the daily takes here is if you like how I think about the world, if you want to know what I'm talking about, it looks like this right here. Lots of information. Hey, I've got a little, this goes to 11 joke in there. It's just how it comes out of my head into the screen and into the world so that we can all begin to have a conversation. You see here Hans starting to talk about that. So that's what I do. I start the conversation and then people talk about it. And this is really important to me because you might come for the information, but you're going to end up staying at Peak Prosperity for the community. And Clara, I think, put it really well here. So grateful for Peak Prosperity and this beautiful tribe here. We were talking about this topic right here. It's just extraordinary, the people we have so at Peak Prosperity. So if you feel crazy, alone, isolated, we have the solution for that, okay? Come on by Peak Prosperity and try out our membership, and we're going to make it really easy because now we're offering 30-day, no questions asked whatsoever, money-back guarantee. You don't like what you're experiencing, it isn't for you, it just doesn't resonate, no worries. And it's not like trying to cancel a gym membership. It's very easy. We make it super easy if that's what you want to do. And we have a little bot that you just chippity-chip, talk to it and tell you what you want to do, and it will happen. So that's what we have going on. I want to invite you to come to Peak Prosperity. The times are changing. We know that we have this looming fiscal deficit breakdown that's about to happen in the U.S. government. How are you prepared for that? What are you doing? Do you understand it? And if so, what steps are you taking to protect yourself from that condition and that thing that's happening? So with that, thank you very much for listening to this. We will be back with you next time with another resilience reel. This is what we're calling these shorter version things I do. And please, I want to see you at Peak Prosperity. Please come by. All right. See you next time, everybody. Bye-bye.